Hello friends, in the series on the income tax cases, today we will discuss a very important case which is related to the assessment year 17-18, which was a unique year in which the demonetization took place. It has been seen that in the cases which were related to the assessment year 17-18, which was related to the previous year 16-17 in which the demonetization took place, maximum number of the additions have been based on just the ground that the assessee was not entitled to make the cash sales or to receive the cash in the form of specified banking notes during the demonetization period. In the present case, the moot question before the Kolkata ITR SMC Bench was that whether there was any blanket prohibition by the RBI to receive the specified banking notes during the demonetization period. This issue has been taken up by Honorable ITR SMC Kolkata Bench in the case of KT Handloom versus Income Tax Officer, and this case is reported in 123 ITR short notes 37, and the date of the judgment is 21st March 2025. The present case relates to the assessment year 17-18, and in the present case the assessee was a wholesale dealer of handloom items. The case of the assessee was picked for scrutiny on the reason that the assessee has deposited the cash into the bank accounts. When the assessee was show-caused that why the cash deposited should not be treated as income of the assessee under section 69A, for that the assessee replied that the cash deposit is out of the opening cash in hand and the remaining amount was due to the cash sales done by the assessee during the demonetization period. But the assessing officer made the addition on the sole ground that the assessee was not entitled to receive the specified banking notes during the demonetization period as per the RBI guidelines. Hence, the assessee has tried to convert his unaccounted money by depositing the cash during the demonetization period. When this matter came before the CIT appeal, the learned CIT appeal deleted the addition for that cash which was relating to the opening cash balance, but he sustained the addition of the amount which was out of the cash sales as explained by the assessee. The assessee moved to the tribunal. The tribunal said that in the present case, if the provisions of the demonetization are analyzed, then it is very clear that the RBI legally demonetized rupees 500 and 1000 note from the midnight of 8th November 2016, and the Reserve Bank of India issued various guidelines and SOP for dealing from the date of demonetization to 31st December 2016 regarding how to deal with the specified banking notes. The tribunal said that it was very clear that up to 31st December 2016, the specified banking notes were a legal tender. They have to become not a legal tender only after 31st December 2016. And from the analysis of all the guidelines and the SOPs, there was no blanket prohibition on any person to receive those specified banking notes. So in this light, if the assessee explains that the cash has been deposited out of the cash sales, so that cash sales cannot be added into the income of the assessee under section 69A just because on the ground that the assessee was not entitled to receive that specified banking notes out of the sales made by him during the demonetization period. So the tribunal deleted the addition made under section 69A. Friends, this case is very important because in number of the cases, the assessing officer has taken this solitary ground to make the addition that the assessees were not entitled to receive this amount, because in many cases the sales has been made by the assessee, whether they are jewelers, whether they are petrol pumps, and in some cases where the assessee has taken a plea that although they have not made the cash sales, but they have received the amount from the debtors. So this case will equally help those assessees who have received the amount from the debtors during the demonetization period. at the end of this video. Once again, I am repeating the name of the case. The name of the case is KT Handloom versus Income Tax Officer, and this case is reported in 123 ITR short notes 37, and the date of the judgment is 21st March 2025. Thank you, friends.